Here in Monte Carlo for the Rendez-Vous de Septembre, thousands of reinsurers, brokers, insurers, investors and lawyers have gathered together for discussions and negotiations about the global reinsurance industry. And conversation has inevitably turned to risk appetite, both from an underwriting and an investment perspective.
I think there's a lot of discussion. I mean, we're in the risk business, right? But I think it's less about risk appetite for me, more risk understanding and really making sure that you understand the drivers of that risk. And certainly at Sirius Point, we're very focused on making sure that we understand, the pressures, but also the opportunities of the different risk types. So, our risk appetite is to make sure that we work with our customers, making sure that we insure their risks, adequately and properly. No one likes surprises, but we do that in a way that works for our investors at Sirius Point. And I would say, certainly over the last year, I think we are well on the way to sort of making, progress in that regard.
Historical perspectives on the ability to underwrite profitable business, I guess. Again, having seen the exodus of certain markets from the property cat arena has just been, we've not seen that before in our industry. And now with the exodus out of California in the personal line space, again, that's just going to put a massive amount of pressure on that marketplace. But again, there are individuals that have capital to deploy. There's new capital that's being brought into our industry every single day, and they will have to weigh those risks and rewards for deploying that capital in certain geographies against certain certain lines and classes of business.
So an important component of the reinsurance industry is the investors, and we're hearing more about investor appetite. Can you tell us a little bit about your perception of investors' attitude towards the reinsurance business?
I think that what we're finding in sort of our exploration of capital markets is there is now a strength of investor appetite for the business. The recent trading history of the business, the market broadly is hitting decent returns for investors. So I think right now there's support. I think we need to, as a sector and as a broader market, we need to behave in a way that shows that support is we're worthy of that support. And I think that historically it feels sometimes like this business almost doesn't like to give its investors great returns for extended periods of time. I'm not sure if that's a way of putting it, but I think there's a lot of support there today. So long as we continue to conduct the business, I think the way the market is trading today, I believe that support will be there, because I think there's a chance that investors will be able to get the type of returns that they should be getting for onboarding all of the uncertainty that we're onboarding today.
How's the investor appetite for risks in Asia, in your part of the world?
I would say in the last couple of years unchanged. Although Asia was always seen as not bringing enough money in comparison to USA, specifically on the property side. But we have, as a company, a very balanced portfolio, and this is highly liked. And for these kind of situations, there are investors. There are new investors are coming into the market, but there are also international investors are coming into the market. For instance, last year we launched the first ever for Hong Kong 144A cat bond for windstorm Japan, and the majority were international investors. So it will take quite a long time to nourish and to teach. Teaching, I don't like that word, but to explain to potential Asian investors what kind of opportunities there are in the ILS market. And that was 1 or 2% only from Asia, but there will be more the next time around.
How easy then is it to attract investors with the cat risk?
Well, this time last year, or just after this time last year, we left feeling that the market was going to harden. We then had Hurricane Ian, which is a pretty major hurricane, and that really put some people off. And I remember going to certain capital providers and saying to them, I suspect we're going to see 40 or 50% rate increases. And it was a bold prediction that a lot of capital providers didn't want to hear. Now we go back to them having seen those rate increases, I think it becomes a lot easier.
So all constituents seem to acknowledge that there are opportunities and challenges ahead. For AM Best TV, I'm Richard Banks.